Hi everyone, welcome back to the channel. Today I'm doing a pretty big video here, packing a lot of content into this video, and I hope if you watch the whole thing, you walk away with something new. Uh, First off, I want to say I'm not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It's not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice. So in this video, first I'm going to do a quick weekly recap of the last couple of weeks. I haven't been posting my weekly videos for YouTube because I took a little break. I'm sure some of you are curious how my portfolio was doing, so I'll go over that very quickly. And then I'll talk about this week's crash, where it seems like the market just keeps going down. People are losing a lot of money that were in a lot of bullish positions, and so they're kind of panicking a little bit here. And I'm going to talk about ways to reduce risk. Then I'm going to talk about a video I saw from Tasty Trade, and I think that has some pretty good content. And I'm going to link that video in the comment below. Then I'm actually going to go through and troubleshoot my portfolio, I'm going to call it. And I'm going to look at my entire portfolio and just kind of come up with a plan of what I want to do with my portfolio moving forward. Because just like everyone else, or like maybe not everyone, but a lot of people, my portfolio took a little hit today and getting a lot of positions tested. So I got to go through and get a clear picture of how my portfolio is looking. And I think seeing someone do that live might give you some ideas for yourself. And hopefully that's helpful for you. Then I'm going to talk about when to roll and how to roll possibly. And then do my portfolio review that you're used to seeing from my previous videos. And suggested that I add some bonus content. And so if you stick to the end, you see some different topics there. The first thing's going to be about options, but then I'll go a little off topic after that. So let's go ahead and jump right into this. So first off, we got our little weekly recaps here. On November 15th through the 19th, I was having some brain freezes, I guess. I was kind of paralyzed. I was seeing a lot of things that were telling me that the market's going to go down, but yet I couldn't turn into like anything actionable, and I just felt kind of paralyzed, I guess, in terms of trading. And what I ended up doing that week is closing down a lot of my trades because I ultimately decided, something weird is going on here. Like I'm seeing a lot of things that saying like go bear, but not enough to make me pull the trigger. And so I wanted to minimize my risk if it did go down. And I ended up closing down a lot of positions, went from like 56 positions to like 7. And the 7 that I kept were positions that I could say to myself, if this gets breached, I'm fine with buying that stock at that position. So I really took a lot of risk off, realized like $12,000 of losses in one day, closing down all those trades. So that's what happened in that week. Thanksgiving week, November 22nd to 26th, I never even logged into my portfolio. So what happened that week? I know the market trended down a little bit because I saw some people posting in Discord here and there, but ultimately I really didn't look at the market that week. So it's like that week didn't exist for me. So nothing happened there. And then this week, give you a little preview coming up, and you can see that I have a lot of negative unrealized positions happening. And there's your quick overview for like the last 3 weeks. So now you're kind of caught up to date. So if you notice that my portfolio looks a lot different than the last time I did a weekly video, it's because I closed down a lot of stuff on that November 15th to 19th area. And a big part of like trading options is not just managing your risk, but also managing your emotions. So that week, I wasn't in the right state of mind to be doing options. And ultimately, like one question I asked myself is, since I'm not sure about exactly what to do, would I be happy if I was to cash out all my positions right now and start with that net lick of 173, I think it was? And the answer was, you know what? Yeah. So that's another reason that I just kind of closed stuff down. I wasn't ready emotionally to be trading during this volatile period where it seemed like all the signs were pointing down, but I couldn't quite pull the trigger on that myself. I'm like a permanent bull, so it's tough to go bearish. This week's crash as something that should remind you guys that, stocks don't always go up. If you didn't learn that this week or before, then I have a Nigerian prince I can introduce you to. Ways to reduce risk. There's really 3 main ways that you can do that. And one of those is to like spread out your plays. Don't put all your money on one ticker. Go ahead and spread your shots like a shotgun. If you spread your shots, you have more winners to cover up for the losers. So that's what I mean by spread your plays. Find different tickers and different sectors to play off of. Another good way to reduce risk and increase your chances of being successful selling options like this long term is to limit yourself to putting in like 3 to 5% of your account into any particular position for risk. So don't go around and YOLOing everything in one position. If you're wrong, you're out of the game. and you have to start completely over, and that's no fun. But if you're wrong and you only lose 3 to 5% of your account, you can make that back in a month or two. So it's not a huge loss, but it's just something that's safe to do. And another way to kind of minimize risk for your portfolio overall is to put on bullish and bearish positions. So I actually got caught in a very bullish position in my portfolio. I tried to put on some bearish positions here and there, but, well, quite frankly, I got caught. So as the stock market goes down, what the idea would be that your bearish positions, like maybe selling some call spreads, those would be making money that would offset the losses from your bullish positions going down. So that's just another way to add stability to your portfolio, is to play both the bull and the bear and skew it towards the direction you think it's going to go, but have plays on it, for hedging, that kind of thing. Tasty Trade. So Tasty Trade had like a pretty cool video up that they were talking about when you should be managing your trades. And ultimately, they were talking about the fact that people, the second stuff moves against them, they get worried and they start trying to roll the positions instantly. And I think it even talks about like an example of like the VIX going up, which is very relevant right now because the VIX went up from 18 like a week and a half ago up to, I think it hit like 34 today, which is insane. Like, that's a lot of VIX. And what that does is that injects a lot of premium into all the options. So even if your stock did not move against you, all that premium being injected is going to make you look like you have a lot of unrealized losses. But ultimately, if you're out of the money, all that inflated premium is just going to go away as it gets closer to expiration pretty quickly because theta's going to chop that in pretty quickly. So if you're in a loop, if your position shows an unrealized loss, but you're still safe from being in the money, like, don't worry about it. This is kind of my thought, because eventually they just going to eat away and extrinsic value goes out when options get near expiration. And it basically just means that as long as you're out of the money on your play that you sold, your trade thesis that you put on is still correct. The price has not gone down and breached it yet. So why are you worrying about that position? And in this video that he talks about defined risk and undefined risk, I mostly only do defined risk plays. So I paid attention to this left side here. And he sets up his own set of rules about when to roll for a credit. They tend to play 45 to 30-day contracts. And then at 21, they roll the position or close it down because they want to take away any Vega concerns in the last 21 days. Because if a stock moves against you in that area, Vega can really hurt quickly. And they talk about doing it for like iron condors and stuff like that. And basically, the main takeaway here is that if you're right, you don't need to do anything. You have to be ready to emotionally like sit through on your hands if the position is still out of the money and not threatening your strike price, even if the VIX goes up, volatility goes up, and increases the premiums for your contracts. Like, that's gonna happen sometimes. We're seeing it a lot this week, and it looks bloody. But if you're playing some safer strikes, you might not even be actually getting tested. And when I go through my portfolio, I hope that's the case. I haven't actually looked through yet, so you'll be seeing my reactions live. So we'll see how that looks. Going back here, what was the next on the agenda? Oh, well, I guess we're gonna start troubleshooting my options play my portfolio right now. So let me switch that over. And right here we have my spreadsheet that I use to keep track of all my trades and everything. And I went ahead and made this little sheet here because I wanted to go through all my positions and figure out how much risk am I at. So I switched to portfolio margin. And for those of you that follow me, you know that if this account went to zero, I think I'd be fine because I have a stable job. And that makes decent money that could support me. So if I lost all my savings here, like, that's fine. What I don't want to be in a position of is owing a lot of money. So I want to take a moment to go through and see, am I safe in that regard? If everything continues to go completely south, what's my worst case scenario that we're looking at? And go ahead and zoom this guy in for you, so hopefully you can see it more. What I started doing was on the left here, I went through and took all my positions that I have on, put the tickers here. I put the strike price and the quantity of the amount of contracts I have for that play. so that you won't have to sit here and watch me do that myself and waste your time. Now, if you look at my portfolio over here, hopefully that's zoomed in enough. Maybe I'll switch to this guy real quick. You can see that I was caught in a very bullish position. My portfolio wants it to go up, and the market's going down. A lot of these are all puts. At least it makes it easy to calculate how I'm doing. And I do have one long call here, but I just put that on. We're going to ignore that guy for right now. All right, switching back to here. The next thing I want to do after I get this set up is figure out how much money is at risk for each of these plays. And what that is just to multiply your strike times your quantity of contracts. And then also multiply that by 100 because every contract is worth 100. And so you can see Fastly at strike 35, I have one contract on, so that's $3,500 at risk there. Worst case scenario, Fastly goes below 35, and I pick up the stock. I have to pay $3,500 to hold that stock. And when I put that on, I said I was fine with owning stock at that price. So I'm going to go ahead and copy and paste that formula all the way down here. And you can see for each position how much money is at risk if it went completely south and the stock went to zero kind of thing. The next thing I have a couple combo orders here. And this TQQQ one is actually a kind of a weird spread I put on. There's a 150-130 spread and then a 140-130 spread. So the difference between my shorts and my calls is $30 between the two positions. So that'd be $30 times 100. So the max risk for that position is 3,000 if it goes completely south against me, because those are spreads, and my long calls that I have, my long puts I have of that limit my loss to the downside if I'm completely wrong and TQQQ continues to go down. And then I have my highly on ratio where I solely put at 12 and bought 2 calls with it. My max loss would be me buying shares at $12 each and then going to zero. So $12 times 100. So that's my max risk for that position as well. And then what I'm going to do is going to go ahead and sum this up. And, oh, look at that. I actually fill that up right there. So if everything here went south, my max loss, or the most amount of money I have at risk here, is $107,000 here. And if you look at my cash balance, that's more, so that's nice. And we can see how much more that is by adding a formula here. So I would still have about $25,000 in cash if I was going to put all these positions. So that's one thing I'm looking at is, okay, I'm not going to go beyond zero in this situation if everything continues to go against. That makes me feel a little better right off the bat that I'm not over-leveraged. At one point, I was at like 2.5 times, where like all my values of that stuff going against me would be 2.5 times the amount of money I had on. That's kind of crazy and risky. I'm glad I was not in that situation when this stuff was happening. So that's just something to think about, is how much money are you actually putting at risk here? Because it's margin, it's easy to get away with, oh, it's only $350 on margin. Well, that's $3,500. And it adds up quickly. So just be aware of how much money you actually have at risk when you're putting on these option trades, because it can get away from you pretty quickly. And even this, like, that's a lot of money for me, $107,000 at risk on these plays. But ultimately, if all these go against me, I'm buying those shares, holding it, and I'll be selling cover calls against them. But I'm going to go through and figure out which positions are now at risk. So let's go ahead and figure out what the prices are of all these. And what I'm going to do is do Google Finance here. And I want to use the ticker. I'm going to click on the cell right here to put in that formula. I'm going to put in price and hit enter. And then what that's going to do is pull in this current stock price for that ticker. And I'm going to go ahead and copy that down. Yeah, we'll put it in there too. Why not? This is giving me pain because it says Highland ratio, but there's the current price. So this is the current price of all those stocks. This is the amount risk or notational value. And then the next thing I want to see is, are any of these positions actually in the money right now? And that's easy. If this is less than this, 1, 0. So any position that's in the money is going to come up as a 1 right now. And then those are the positions that I'll probably want to really look at. So I'm going to sort the range by column F. I want the bad ones at top. So now these are my positions that are actually in the money. So these are ones that I may need to worry about, especially since a lot of my stuff has only 13 days left. So it's just 2 weeks. If you go back to that Tasty Trade picture, he was doing his management at 21 days. Well, I'm below that. I'm fine with holding stuff closely because ultimately all these positions I'm fine with taking an assignment on if I needed to. But let's go ahead and start looking through these real quick. So first off, we got Ride. And I like to do my analyzing in Thinkorswim. So I'm going to pull that up. And I'll switch over here to give you guys a more zoomed in view. Pull up Ride. And Ride is currently, oh, it looks like it's at $4 right now. So that's interesting that that said that was in the money. But it's close enough. Then I do a 450 call. Looking back at Ride, going back 2 years, it looks like it was trading at $9. It's gone up, it's gone down. This is one that I wouldn't bother trying to roll to try to defend the position. It might continue to go down for a little bit, but it's at all-time lows for like 50 or for like the 2-year lows. So I'll be fine with taking the stock. Again, this is a really small position, so there's only 1350 at risk for this. And yeah, so this one, I think I'll wait until the date of expiration, and I'll take assignment of this if it comes down to it. Next up, NIO. Actually, this one I'm not sure why I put that trade on. We'll go ahead and pull this up. Here's the 2-year. You can see going back 2 years, this is a $2 stock, so it has a lot of space to run. One thing you notice, though, is that I've been trying to spread my plays more. If you looked at my previous videos, like even a month out, if I was playing NIO, I would have done 10 contracts. But this time, I'm spreading my plays. I only have 1 contract, so only $3,500 is on risk on this play instead of $30,000. So this is what I mean by spreading your plays out. So I'm not too worried because this is a small portion of my portfolio here. Although, obviously I'm $3 in the money right now. Hopefully the stock goes up from here. But we have no news coming up, it doesn't look like. No earnings coming up. So it's potential, it could drop all the way down to 27 and kind of like stick there for a bit. This may be a position that I'll wait till expiration, or I'll check the extrinsic value. Let's check that real quick. All products, pulling this up. And I believe this is a 14-day one. I sold the 35 put. Extrinsic value, a $1.50 of extrinsic value still there. With 2 weeks left to go, that's going to be getting burnt pretty quickly. So I'm going to go ahead and let this one sit and give it another week. But I'll reevaluate at the end of next week. And I'll ultimately probably end up rolling this guy. Try to chase it down a little bit. But it's not a stock I really want to own. So that's what I'll be looking at. Oh, it might help if I actually change this so you can see what I'm typing here. Sorry. So reevaluate in a week, and then ultimately I'll try to roll it and chase it down a little bit, see if I can kind of reduce that loss by collecting the credit when I'm rolling my position. Zoom. I put this on back when Zoom was sitting at like 220, I think it was. I thought 185. Oh, that's pretty good. But Zoom continues to fall, despite the fact that this whole market downtrend seems to be because of the new variation of COVID coming out. You would think Zoom would be going up because that means more places are going to have to stick with Zoom, which means Zoom makes more money. So I'm a little confused why Zoom is still going down despite that news going on. Anyway, let's go ahead and pull out Zoom charts. Switch this back to this guy for you. This is one we probably want to look at the 2-year. Already there, perfect. So going back 2 years, Zoom was at $62. They've established themselves as like the go-to remote place for virtual meetings. So I think that 62 is like not going to come up anytime soon. And maybe the stock will go down and find some grounds around this area here. We got some volume around the 145. So again, I think this is another position that come expiration, I might be able to go ahead and roll this position out, chase it down if it needs to. Ultimately, I think it's just going to go up before expiration. We got 2 weeks. I don't think this market's going to keep going down, but I'm just going to set my hands for now, wait. But this would be one that I will be rolling because I don't want to tie up $19,000 in this stock at this time. So that's, I think, going to be one that I'm going to end up rolling. Virgin Galactic, let's pull that guy up. And this is one that you just feel like is going to spike at any moment. It just randomly spikes up, comes back down, spikes up, comes back down. Well, we're down right now. Eventually, they'll have some kind of news come out, some upgrade, and they're probably spike. So this is one I'll actually probably take assignment on because I'm being assigned at the 17 strike. I don't know why I just drew some lines there, my bad. But a lot of volume here. That seems like a fair price to be buying Spice at. And I'll be fine with taking an assignment on this one. Luckily, I only have 4 contracts. In the past, I used to do 20. So it's pretty sizable because it is a $7,000 position just about, which is like 6% of my portfolio. But this one I'll take assignment on expiration. If we look at the extrinsic value of this position right now, what did I say? That was a 17. $3. If we subtract 3, sorry, extrinsic 0.39. Actually, there's not that much extrinsic. So this would be a position if I wanted to roll. I might roll this one early because there's not that much extrinsic value left. So this would be one I'd be fine rolling 2 weeks early because there's not much extrinsic value to burn off from Theta. It's trading almost at extrinsic value. But again, this is a stock that I'll probably end up just taking an assignment on. So that's kind of, I'm going to put Nusi. I don't think I really need to look at Nusi. I sold this put because I want to actually up my position in my portfolio to have more Nusi and basically double my dividend income from Nusi every month to about $200. And we'll pull it up anyway to look at the chart. And I sold the 28 strike. You can see it's been trading between 27 and 29. Again, this is one that I'm not rolling because I want to buy the shares. I sold this when Nusi was at 28.70. So buying at 28 was a discount from when I wanted to buy it. So in my books, that's already a win, even though in the actual books, it's going to end up being a loss. But if I just bought the shares of Nusi, I'd be down on the shares themselves. So it just, where's that loss being booked at is basically where that's coming from. Switching back here. Nusi, take assignment. This could be a lot of cash being taken up, huh? Palantir. You guys know me. I've been playing Palantir for a long time. And I think that stock's just going to move with the market in whichever direction it goes. So if the market starts going back up, it's going to finish out the money. If the market continues to go down because of fears of the new virus variant coming up, then it's going to keep going down. Palantir, I think, is going to be a company that is fine holding long term. This would be another one that I'm fine with just buying or owning the shares. So I'll be taking an assignment on this one. But let's go ahead and look at the trade here. Oh, what day is this guy? Palantir, 13 days, 22 put. All right, 22. Extrinsic value. There's not much extrinsic value there to be burning off at this point. So if I didn't want to actually own the shares, this would be one that you would go ahead and close the position. So it would cost, let's go ahead and call that $3.15 to close. So if I was rolling this position, I would pay $3.15 to close it. Now go out in time. So let's go ahead and say January 7th. And the first thing I would look at is the same strike to see, can I get a credit? And the answer is almost always yes. And then the next question would be, can I get safer and lower that strike price and still receive a credit? In this case, I might be able to drop it 50 cents for a net wash. So that's like saying, I was wrong on my play. Give me another month to be right. If I was to sell that for $3.15 as well. Might be able to close for $3.20 or sell this open for $3.20, in which case you receive $5 to get a redo. But This would be how I look at a position, like if I want to roll it early. Like there's 2 weeks left of my current contract, but there's not much extrinsic value, so it doesn't hurt me to go ahead and close that, roll it out if I'm really worried about this position and want to lower some margin maintenance or something like that. All right, the rest of these positions are out of the money, although if you look, like some of them are pretty close. Fastly, I think, was actually in the money earlier today. And going back 2 years, ooh, that looks bad with it being down to $10 here. You know what? If this guy gets tested, I don't think I actually want to own Fastly. So it does show it's oversold. This is one I'm actually going to just wait until expiration. And then if I need to buy this to close for a loss, I'll buy to close for a loss. I don't feel like chasing this guy down. Because after this level, like, you're not going to find support until 20? I don't want to chase this guy down. So that's going to be my plan with Fastly. If at expiration it's in the money, I'm going to buy to close wherever the loss difference would be and just be done with her. Campbell's Soup, I think that's trading at like 40. Well, it's right there, it's trading at $41. Again, that's another position that I'd be fine owning at 39. Dividend payer. Let it sit there, sell some cover calls against it. CCL. Again, this is one that I feel like has the potential to be down quite a bit in the short term. So if this whole COVID thing comes up again, it's going to be down. It might get down to $10. So this will be looking at an unrealized loss for a while if I take assignment. But eventually, I think it'll be back up above 22, 23. So again, this is why I'm okay with taking assignment of this stock. Maybe I'll sell some cover calls against it, maybe not. But I think ultimately it will be up, which is why I sold the put on it at the 17 or 16 strike. Like, I don't mind buying it at 16. When I sold this, it was at like 23 when I sold this strike. So there's a pretty big discount from when I would have bought this position. KMB, I think this one's pretty safe right now. KMB is one of the few stocks that are actually going up while everything else is going down. And ultimately, this one I would roll because it's a pretty sizable amount of cash to type into position. Although I wouldn't be too worried about KMB going down. If everything else is going down, I think KMB's going up. So, Chewy, I don't even think we need to look at this one because, well, it's still $20 almost away from being in the money. Javion, this is a play. I think this goes to January, so there's plenty of time for it to finish out of the money or in the money. It doesn't matter. This is one I said I was fine putting a $12,000 gamble on this position. So I'll take assignment on this one when that comes up. This one, I wouldn't want to own 300 shares of CRSR if it was to go in the money. So I'd probably chase this one down. I don't think this one has a lot of room to fall. Pull it up real quick. It might help if I actually type it CRSR. Sorry about that. You see, a lot of volume has been trading in the 26 range for the last 2 years. And we got earnings coming up, and they're probably going to do good from the holiday season here with people buying all the new headsets for Halo, Call of Duty, and Battlefield. So I think they're going to be fine. I don't expect to be tested on this one. If this one goes in the money, I'll let it sit there until expiration. I'll make a decision later. I think this has until like January 28th, so there's plenty of time on this position. And then obviously Rocket. This is a position I think is a stock worth at least $22, so getting assigned at 15 would be fine. So that's kind of how I'm looking through this. TQQQ. This is a bull put spread. Well, it's actually 2 bull put spreads. It's a 350, 330 spread and a 340, 330 spread. So the max loss is 3,000. It's a defined loss play. If we go back to the Tasty Trade thing, for a defined risk, do nothing most of the time because you already know you're okay with losing all that premium. And there's just plenty of time left on that. Actually, no, there's 2 weeks on that one. So we need like a quick turnaround for this one to be a profitable position. But again, I define my max loss, so 3%, or sorry, $3,000 for my max loss. And then this is just a long-term fun play that's just going to sit there, and at the most this can lose is 1,200. This position has until 2024 to be right. So we'll see what happens. Any kind of new spike, and this is a profitable position. So there you go. That's basically how I just went through my entire portfolio to see how I'm looking, it looks a lot worse before I did this. Now that I went through this, I feel a lot more at ease. See, even in worst case scenario, if everything went against me, I have the cash in my account to secure all these positions, so that makes me feel easier to begin with. And then looking at all these, like my strikes I chose were at prices I thought were good times to buy the stock. So I said I was fine buying those stocks at those prices, so they shouldn't be horrible positions for me. And that's why I always say, like, only sell cash secure puts on stocks you would not mind owning at that price level. Because sometimes you're going to have to do it, or you have to roll repeatedly until you chase the stock down. But my mindset going in is, what if I have to take assignment of the stock at that time? And I think it helps me stay conservative enough that if stuff goes against me, I'll be fine. Now, ideally, you wouldn't be getting put all these shares, and while VIX is increasing, you have the cash available to sell more puts and take advantage of that higher premium. Most of these positions I put on this week, and that's because I saw the VIX was up to, I think, 27. I was like, whoa, that's so good. There's so much premium. It can't get much worse. This is a surprise. And now VIX is at 32, 34. What's it at? Back down to 30. And it's just like all this artificial premium being injected, making positions look like losses. But if you look, half my positions are not even in the money, so there's no reason to manage these at this point because I wasn't over leveraged. Now, if I was over leveraged, I'd have to be closing positions in order to reduce margin maintenance. This is why we say trade like a 20%, 30% of your margin maintenance ratio. Keep it small. You have room for expansion. We're seeing that right now. I'm feel fine because I was trading small, and I hope you guys were too. But if you're not, go ahead and join our Discord. We have a lot of people that love to help people, and for an unlimited time, you can join for free $99. It's a free Discord server. It's always gonna be free. There's no intention to make that a paid server. Like, go ahead and go in there. There's over 1,000 traders in there now, and some of the most helpful people. I've learned something in there every day. So a little sales pitch for joining the free server right there. All right, what else was on the agenda here? Let me switch back here. Take that off. And when to roll. I think we kind of just went through that. Like, when you're looking at positions, look at the extrinsic value that's left. Well, first, ask yourself, are you still going with your original trade thesis? Like, you made a bullish play because you thought the stock would go up. If you're being tested, were you wrong on that? If the answer is yes, do you really want to keep that bullish view on that stock? So the first question is, are you still going to keep that view? You think your trading thesis is still correct? Maybe it needs a slight adjustment to be right. But that's going to be your first question is, do you really want to still be in this position? If the answer is no, don't try to defend a loser that you think is going to keep going down. You're just catching a falling knife the whole time. Second thing that I like to look at is the extrinsic value. If it's a lot of artificial premium being pumped in because of volatility spikes or so like their Vega being inserted, then go ahead and let that theta burn out because like that will go down a lot quicker than the position that you'd be rolling to. So if you roll now, you miss out on that extra burn. Whereas if you wait, that closer data contract loses more value. And then when you roll, the one that's further out didn't lose as much value. So you make a little profit or some of your money back by doing that. But just see if the premium that's left there is worth waiting on it. And if not, go ahead and roll it. And another thing I'd like to think about is, well, another thing you have to think about would be your margin maintenance. If you're over leveraged, you might need to close positions or roll them out further in time to reduce your margin maintenance so that you don't get a margin call. That might be another thing that you have to think about. Luckily for me, I'm not anywhere near that situation right now. And with portfolio margin, I think it's a lot harder to get in the situation if you continue to trade small and not go too big too fast. My portfolio review, I'm just going to do like a quick little thing here. Let me zoom out of this guy. And options, I did some option trades this week. I'm going to let you go ahead and pause this if you need to look at it. I mean, I did do a couple of short TQQ and QQQ plays. I closed out the same, like the following day. Realized a couple premium. I realized a couple profits from some quick plays like that. It might help if I switch to the correct screen here. I'm sorry about that. Let me go back. We want the Google view. Something else I have is I have a stream deck now, so I can switch between scenes. I'm debating about whether or not to try doing a live stream, so I'm trying to get used to using this during my recordings for the videos. I'm sorry I'm not going to edit this video. I've got some plans tonight, so I can't spend too much time editing this video. So any mistakes in here, this is basically like a live show, because I'm not going to do any editing to it. And going back, here's all my trades for the week. I think we start here. So obviously on Monday and Tuesday, I saw the VIX was up, so I sold a couple plays. Actually, I sold quite a few plays. I did have a couple plays that I opened up and closed for some small profits here and there. This one, I played Tesla twice here. I got a little aggressive. Probably weren't the smartest plays to do, so I got away with one or two there. I'm not gonna lie. You can pause the video, zoom in if you want to look at those. Quick overview. You can see big realized losses now for November. And that's because I took a day where I closed down like 45 positions, regardless on what it was. Like, there were plays that I thought were pretty safe, but I was like, no, take them out. We're not really like to only at that spot. So I closed a lot of stuff that I didn't really need to at that time. And when I did that, I was like, that's not the smartest, probably wasn't the smartest thing to do. Like, I abandoned a lot of strategies I was doing. But in hindsight, seeing the market now, I think I basically jumped off the railroad track just in time for the train to swoop by, because would have had a lot of stuff pretty deep in the money had I not closed all that out. So I'll be honest with you guys, I got pretty lucky. Obviously, December, I have some profits here. That looks wrong. So there's something in one of my trades I have to go find. I did not make $966 this week. What else do we have? We got the tracker. So you can see it just a few weeks ago, I was at 175. I'm now down 165. So the last couple of weeks, I've lost about 10K in value. And since I wasn't really logging in, I'm going to have to like verify these numbers to verify that they're correct. And I'll have to put that in. Next up, I'm going to talk about some bonus stuff here. So first off, something I want to learn more about is notational values, or the amount being risked per play. And even on my sheet here, this is kind of like version 1.0 here. And this is kind of what I was looking at. When you're looking at putting on a new trade, how many contracts should you be putting on based on your portfolio size? And this version is kind of very basic and default, just to give me the information I needed. And what I'm trying to do is put that into the spreadsheet that I share for you guys on the next version that comes up. I'm hoping to get this out before the end of December. I'm doing some troubleshooting still. But the basics of this one is it's going to be looking at your options that you put in. So these are some theoretical plays that are in here. And well, let's go ahead and show you this. The spreadsheet's being modified so that you can do different trades, but have it all in one row here. And these are the trades that I have in here so far. If you pick one of these, it's going to tell you what strike you need to put into each of these columns. So put your long put here, short call here. And then all the formulas will calculate correctly depending on what you put in. So this is a big change I'm making from my older version. I'm hoping to have a tab that could help you transfer your old positions into the current spreadsheet when this comes out, to make it a little easier to make that switch. But obviously, if you sold multi-legs before, it might be a little harder to get that set up in here. Anyway, back to here. What this is doing is all these cells are pulling out for any trades that you do not have closed yet. So you can quickly see all the tickers you're playing, the strategy. The first strike comes up here, and it tells you like the amount risk, the rotational value of all those positions. And then the idea would be whatever trade you're looking at doing, you could put the ticker in here and then put in the amount you're at risk right here, and it'll tell you the suggested contracts that you should be putting on. If it's less than one, then obviously do not go more than one. And this is based off of like your percent you want to risk per play, which you would change here. So in this example here, I want no more than $5,000 basically risked per trade. And this will let you help figure out how many contracts you want to put on. That's kind of the goal of this. And then if we scroll to the right, another thing I want to do is spread my plays around more industries. So I'll be looking at, do I get too much exposure to one industry? And if so, maybe I won't put that position on. I want to spread out my plays more. And so that's kind of what I'm going to be starting to look at as well. And then there's just this pretty funny graph here that'll show you like your breakdown by industry. So that's a little preview of something that I'm working on. Hoping to get that out before December's over. Some non-related to option news. I found out that my niece and nephew actually watch my YouTube channel. I guess my sister subscribed to my YouTube channel when she found out I have it, but she has zero interest in any of this stuff. Like, that might as well be speaking a foreign language. But it turns out my niece and nephew love seeing Uncle Thumper in space. So I just want to say hi. I'm not going to say their names because they value privacy, but hello, they know who I'm talking to. And I think that kind of wraps up this video. My niece had one request, and that was that I need to end my videos by saying bye!